Welcome to The Explainer. Today, we're unpacking a huge trend you've probably been seeing all over the headlines, the sudden return of these massive, multi-billion-dollar company buyouts. It feels like every other week another giant deal is announced, and we're gonna break down exactly why it's all happening right now.
Okay, so let's just dive right in because the numbers for 2025 are pretty fascinating, and at first glance, they just don't seem to add up. The total number of deals getting done, it's actually down about 9%, but, and this is the crazy part, the total amount of money being spent on these deals has absolutely skyrocketed by 28%.
And that brings us to the real question here, doesn't it? If fewer companies are being bought and sold, how on earth is so much more money changing hands? Why are all these corporations suddenly making fewer but much bigger bets?
To get to the bottom of this, we've got to understand the big picture of what the whole mergers and acquisitions, or M&A world, looks like this year. Because this isn't just a small shift, it's a fundamental change in strategy. The kind of deals we're talking about, well, they have their own special name, Megadeals. And look, these aren't just big transactions. We're talking $10 billion or more. These are moves that can literally reshape entire industries, create new market leaders, and just wipe out rivals overnight.
So, the key idea to hang on to is this: fewer shots, bigger targets. Companies aren't just browsing anymore. They are using this incredibly concentrated firepower to go after the one or two huge, transformative deals they believe they absolutely have to make to win.
And the scale of this is it's staggering. By late summer of 2025, the total value of these deals had already climbed to about $2.6 trillion globally. Yeah, that's trillion with a T. This isn't some small trend. It's a tidal wave of cash, and a lot of it is being driven by these huge deals happening in the United States.
Okay, so what's actually fueling this engine? What's making it all happen? Well, it really boils down to three key things that have come together to create a kind of perfect storm for these big deals to make a comeback.
All right, first off, borrowing the enormous sums of money needed for these deals is slowly getting a bit cheaper. Second, you've got company boards feeling this intense pressure to find new ways to grow. And let's be honest, buying another company is often the fastest way to do it. And third, there's just a massive pile of cash sitting on the sidelines that has to be spent.
Let's zero in on that third one for a second. Private capital. Right now, private equity firms are sitting on a mountain of what they call dry powder. That's just cash waiting to be invested. And it's not a small mountain. It's $1.2 trillion. A lot of that money has been sitting there for years, and these firms are under huge pressure from their investors to put it to work. That pressure? It's a massive catalyst for getting deals done. Now, if you think of cheap money and pressure as the fuel, then you have to think of artificial intelligence as the spark that's lighting the whole thing on fire. What we're seeing is a frantic strategic land grab for the specific assets you need to dominate in the age of AI.
You see, the logic here is that to really win in AI, you need three main things: massive computing power, which is scale, unique data that no one else has, and a built-in customer base, what they call distribution. And for a lot of companies, it's just way faster and, frankly, cheaper to buy these things than to try and build them from scratch.
And this deal is a perfect example of that strategy in action. You've got the buyer, Qualtrics, bringing this powerful AI analytics engine. And then they go after the target, Press Ganey, which is sitting on a treasure trove of unique healthcare data. The logic is simple, right? You combine the two, and you create this powerful, durable advantage, a competitive moat that would be incredibly hard for anybody else to replicate.
But it's not a total free-for-all. While all these companies are hitting the accelerator, there's a pretty powerful handbrake being pulled by governments and regulators all over the world, and they're getting more and more skeptical of these giant companies combining.
And you can see that this oversight has been getting stricter and stricter. The US put out tougher guidelines back in 2023. Now in 2025, you have regulators in Europe looking at ways to review these strategic AI deals, even smaller ones that might have flown under the radar before. The message is pretty clear: a lot more scrutiny is coming.
A perfect real-world example of this is the gigantic proposed merger between two of the biggest US railroads. I mean, creating a coast-to-coast network makes a ton of sense on paper, but a deal of this size is almost guaranteed to face a very long, very difficult, and very public regulatory battle over what it means for competition.
So, with all of this in mind, the drivers, the AI race, the regulatory risks, what I want you to take away from this is a really simple toolkit you can use to analyze these deals yourself the next time you see one of those big headlines pop up. First, it helps to know that pretty much every big deal follows the same path. It all starts with a strategy, then moves through this painstaking process of checking everything out and getting the financing. Then it has to get past the regulators, and only then, after all that, comes what might be the hardest part of all, actually smashing two massive, complex companies together. But look, you can cut through all the noise and all the complexity by just asking yourself three simple questions. First, in one sentence, why are they doing this? Is it about getting bigger, getting data, or getting customers? Second, do the numbers actually add up? I mean, where are these promised savings or new revenues really going to come from? And third, can this thing even get approved?
So the next time you see a mega deal splash across your newsfeed, you'll be able to look right past that flashy headline. With this framework, you can start to decide for yourself whether what you're seeing is a brilliant visionary move to shape the future or just a massively expensive mistake in the making.